What's up, everyone? I'm Rocio, and this is Tyler. He's the founder of NXT Mortgage. I'm sure some of you guys may know or have heard about him. And Tyler, do you want to tell us a little bit about NXT?
Yeah, Rocio, well, hey, thanks for having me here. Rocio invited me to answer some frequently asked questions she gets on the financing and mortgage side. As she mentioned, I'm the founder of NXT Mortgage. I've been in the mortgage industry for a few years, and really the whole purpose of our company is to educate, teach our clients, and let them know more about the mortgage process rather than just, hey, you're buying a house, here's a loan. Really excited to be here and happy to answer some questions.
Yeah, great. Well, I know you guys have asked me a few questions, so I brought them with me. One of the biggest questions that I have, Tyler, is when people ask me, okay, well, you told me to shop lenders, and now they're gonna do these hard pulls on my credit. How does that affect the credit score? Because that's like a huge concern.
Yeah, I mean, I get that question all the
You
time,
do,
for
yeah.
sure. It's a little known fact that you can actually pull your credit as many times within a 45-day window, and it only counts as one hard pull. So it's not going to affect your credit.
Okay, and now the next question I have, Tyler, is people will get these pre-approvals and they'll have a fixed and a variable option for interest rates, and they're like, well, how do I know which one's best in which situations? What would you have to say about that?
So a fixed rate loan is going to be the same interest rate over the whole life or term of the loan. Typically a 30-year fixed is what a lot of people get, or a 15-year fixed, or any kind of interval in between. Adjustable rate loan, that interest rate is going to adjust after a certain number of years, and it'll change every year based on where current market interest rates are at. So if rates go up in the next couple of years, then your adjustable rate will adjust up, which could be worse.
Yeah.
If rates are going to go down, then your rate will actually get better. So that could be better.
Yeah.
So, nobody knows where markets are going to go. And so you kind of have to judge your decision based on your desires with that home that you're purchasing.
Yeah.
If you plan on being in the house for a very long time, it may make more sense to get the fixed rate.
Yeah.
That might be a little bit higher, but you know that it's going to stay steady over that long period. If you're going to be in the house only a couple years, you plan on moving out, upgrading and selling, then maybe an adjustable rate would be better because it'll be a shorter rate today, and for the next couple years, you'll save a little bit of money. The only issue to have there is if rates do go up, and now you're kind of stuck in that loan and you don't sell the house or you don't refinance later. Larger lenders or banks or online lenders may just force them into one product and assume that's what they want or what's going to fit their scenario. So, we go through that process with people and try to analyze what the best option is for them based on their scenario and what their goals are with that house. So we want to help people shop around and compare those options. Yeah. That way they're making that informed decision. And depending on your situation, we'll try to tailor the loan product to fit you best.
That's awesome. I'm huge on that. You guys know I'm big on having the consumer be educated, having you guys be educated, and I think NXT just really does that well. That kind of brings me to my next point. They want to know, okay, I'm shopping lenders, but how do I know which one is best for me, or how do I know that these loan packages are right for me? Like, what are some points that you would really want to highlight for them to look out for?
So when you apply for the loan, you're going to get a loan estimate, and there's a lot of different figures and numbers and fees on that loan estimate. It's very confusing. You're really looking at a couple key things. One is obviously the interest rate and the loan type. And then the other one would be the very first section of a loan estimate has the origination charges. Those are the lender fees. Okay. So one lender may offer you a very low rate, like, oh, we're getting you a 4% interest rate, and you think they're giving you a good deal, where another lender says, oh, I've got you at 4.25%. Yeah. If the 4.0 interest rate person is charging $3,000 in origination fees and closing costs for that rate, then it may actually be a worse deal than the 4.25%, but they're trying to maybe incentivize you by showing this low interest rate, but they're not telling the whole story of all the fees. Okay. So we'll tell our customers if they get a loan estimate from another lender, go ahead and send us a copy of that loan estimate. We'll help you compare it to ours so we can show you the breakdown of what fees are actually different between lenders versus what's going to just be a title company fee or a taxes or insurance. And then another thing is when you first get pre-qualified, you're really not going to get an official loan estimate at that time. The lender may offer you a very attractive rate or no fees today, and then you go find a house 3 or 4 months from now, and their numbers may change because the market's changed, or they may try to add additional fees later. So once you find that house and you get that official loan estimate, that's when you really want to compare between different lenders and decide who you're going to use for the mortgage.
Gotcha. That's good information. So another question that I get a lot is everyone is like, okay, well, what all do I need to get pre-approved? Like, what documents am I really going to need? It could be overwhelming. So can you kind of break it down for them a little bit?
Yeah, so typically any mortgage you're going to need kind of a basic set of things. I'll go over those in a second.
Yeah.
When you first get pre-qualified, you're going to fill out a questionnaire, an application online.
Yes.
And then the lender's going to pull your credit, review your credit report, and all the information you provided. That process is only as good as the information you provide, and that's why the lender's going to ask for the documentation to verify the things you said. Typically, they're going to want to see 1 month's worth of pay stubs.
Okay.
2 months worth of bank statements to make sure you have cash for your down payment and closing costs. And then if you're a W-2 wage earner, so you just make base salary or kind of only W-2, they just need 2 years W-2s.
Okay.
For people who are self-employed or have other forms of income that are showing up on their tax returns, then they'll want to see the full tax returns for 2 years as well. You'll need to give form of ID, driver's license or passport, social security card, things like that. And then the documents vary from person to person, but typically they're just trying to verify your assets, your income, your credit to make sure that you can truly qualify for this home loan and be able to pay the loan back, right? Because that's what really the lender cares about.
Yes.
And since 2008, 2009, the documentation requirements have come up a lot. They're much more strict, and rightfully so. They want to make sure that people can truly afford these homes that they're going to buy, and we don't put ourselves in another financial crisis.
Exactly.
So.
Yes. Good point. All right, Tyler. I think that's it. I think we covered all the points or the big questions that I've been getting. I just really want to thank you for being here and taking the time to meet with me and for helping me educate everyone and help them understand a little bit about the ins and outs of lender requirements and how that process really works. I think you made it really clear and really easy to understand. So yeah, thank you so much.
Yeah, well, thanks for having me. Definitely happy to be here, answer questions. I always tell people, ask questions early if you're looking to buy a house later this year, next year. Just ask those questions now. Become educated.
Be informed now.
Be informed now before your lease is running out next month and you've got to get a house.
Yes, and everything's so fast, and you don't want all that info all at once.
Yeah, so I love sharing that information and answering these questions. So definitely glad I was here. Appreciate it.
Sounds good. All right, guys. Thank you so much for watching. You guys know we appreciate your time, and we'll see you guys next time. Bye.
See ya.